This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on August 31, 2017. Our time is 8:40 Mountain, and happy birthday yesterday to my mother. And I will not give her age for fear of my life. Warren Buffett. Warren Buffett turned 87 years old yesterday. Long weekend coming up. Here it is. Yes, the Labor Day long weekend. And our radio show runs on 6:30 CHED in Edmonton, Sunday afternoon at 3 o'clock. If you ever miss a radio show, they're archived on Harold's website, rarecoloreddiamonds.com. rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Telephone number 1-800-432-1022. Coming up later in the show, we'll talk about Harold's auction currently underway at hsfineauctions.com. Go there, sign up, take a look at the catalog, and start bidding. We'll get into it later in the second half of the show. We'll talk about diamonds as well. This week's featured diamond is a .29 carat Paracut Fancy Orange. See it at rarecoloreddiamonds.com. Featured diamond of the week. It is absolutely gorgeous. And what a week it was. Obviously, our thoughts and prayers go out to those in Houston, Texas. What a tragedy of epic proportions, something that will take years and years to recover from. I was talking to Harold prior to the show starting, and we both saw on television the woman who had been in New Orleans for Katrina moved to Houston and was hit with this Hurricane Harvey now. So thoughts and prayers to everyone that is being affected. And they're Texas tough. If anyone can beat it, it's the folks of Texas. They're like Albertans. They are tough, tough folks, and we wish them nothing but the best. One of the other events of the week, North Korea fired a missile over Japan. And as a result, we saw gold pop up over $1,300. It broke $1,300. Harold will give us a number here where he thinks it's very important for gold to break above. We'll get that in a moment. But between North Korea and what was happening in Houston, obviously it was a very eventful week. And Harold, I really wonder now, with the Fed, will they raise interest rates in December or before the year is up? How long will they wait to raise interest rates with Houston having taken place? Or will they just completely ignore that and go ahead and raise rates anyway? I'm curious to see how it will work out.
Yes, it will be interesting. There's no doubt about it that this catastrophe, it's a $100 billion catastrophe. Houston's the fourth largest city in the United States, and it's absolutely amazing. Now, I survived, my family and I survived Hurricane Wilma back about 10, 11 years ago. So we certainly know what the good people of Houston are going through. It's a real life-changing experience, because the fact is, when you see it on television, it's one thing, and as good people, our hearts go out to everybody and hope that their families are going to be okay. But when you live through it, it's a totally different situation. You know, the fact is that when Wilma hit our home, and it hit it dead on, we had over $150,000 worth of damage to our home. We had to leave the home, actually, and relocate, for 2 weeks up in Orlando just to continue to be able to survive and to be able to do business. So I know exactly what they're going through. The fact is that once the storm is done and you go outside to view the damage for the first time, it's something that is just unbelievable. It's almost an unexplainable reaction to the total destruction of everything that you've worked for your whole life. And it's a heartbreaking situation, and it can go on for a long, long time. So you're talking that in Houston, over 40,000 homes at this particular point are destroyed. 40,000 homes. If you average 3 to 4 people in that home, you can see the amount of people that are being displaced. So it's a $100 billion catastrophe that's going to take, years and years and years to get that back. And again, it's just heartbreaking to know that most of the people don't have anywhere to go. So as Randy said, our hearts go out to everybody there. I know exactly what they're going through, and we wish them Godspeed, and we hope that everything works out well for them. As $100 billion catastrophe, just think about how it affects the insurance companies. And, by the way, we're getting to the heaviest time of hurricane season. There's another tropical storm or depression, in the Atlantic at this particular point. So these are life changers, not only for the actual people that are involved in the catastrophe, but for the entire country, because $100 billion just doesn't come out of nowhere. And the fact is that it's a catastrophe that nobody was planning on, and now they have to deal with it, financially and to rebuild Houston. So it's a terrible situation. It's going to be interesting to see what is going to happen with interest rates, because again, almost the stock market in the U.S. shrugs off almost every situation. But this is a big one. On one hand, you're looking at tremendous destruction in Houston. On the other hand, Houston has to be rebuilt. So for the market, is that a positive or is it a negative? It's got to be a positive for it, because if 40,000 homes have to be rebuilt and Houston has to be rebuilt, that's a lot of electronics, it's a lot of copper, it's a lot of building, it's a lot of everything, and that is probably good for the stock market. So we're going to have to see how they determine how this catastrophe is really going to size up, and basically we'll have to see if they are going to continue to raise interest rates. My gut feeling is that they are. Again, the stock market is still holding in there, and even with everything that's happening at this particular point, the Dow is up 34 points this morning. It's almost at 22,000. So, and the gold market is trading right now up 750. So, what we did see this week was, number one, the fact that North Korea, and we've talked about this for the last month or so, we said that this type of situation in North Korea could definitely affect the gold market. We didn't feel that North Korea was really going to go through, with what their threats are. But at this particular point, they're persisting, and the market has broken now 1,300. I mean, it's been extremely difficult for gold to break 1,300. It's tried several times over the last several months, has not been able to do it. But the situation with North Korea, and the fact, and Randy's going to explain this because he's got the article on it, that something mysterious happened in the gold market this week, caused the gold market to break above 1,300. As we're trading today, the gold market's trading at 1,316. The important number for gold, and I've said this for a long, long time, is $1,380. Gold has got to break 1,380 and close twice above that in order for this market to really break out. And it's got a chance to do it. The fact is that gold is tied into the U.S. dollar. If the U.S. dollar is strong, gold is normally weak. Because President Trump is doing such a horrendous job, the U.S. dollar has fallen by about 10 cents in the past several months. So that's why gold has actually rallied. But it couldn't break 1,300 till this week. So the fact is that 1,300 is a fairly important number, but 1,380 is the biggest number, and we'd have to see two closes above 1,380, and that would determine that gold is getting ready, is in a position to break out. So the fact is that it's funny how trading goes. Gold's been down as low as 1,050, and we wouldn't buy it at 1,050 because the dollar was strengthening, and it appeared that gold was going to go lower. But then Trump got into office, and we like to call it the Trump factor, because there's about $200 built into the price of gold right now, in my opinion, to do with things that he's going to screw up. And there's no doubt that one of them is going to be, if things persist with North Korea, that's a situation that really concerns everybody, and he just doesn't seem to back down from these. He's a bit of a bully, and he doesn't back down from these type of situations. So, again, we had to wait until gold hit 1,050, which appeared to be its bottom at that particular time. Then the gold market languished in between, just below 1,300 and 1,100. So it's traded in a range, but the fact is that there was no reason really to buy gold at that point because it was trading in a range. There was no news. We still needed a further determination on the dollar as to whether it was going to go higher or lower, because if the dollar was going to continue to increase, it was at 103 at one point when Trump just got in, then gold was going to, continue to trade sideways. But that's not the case now. We need to see gold break 1380. So we really have to sit back and let all this movement go in gold, unless you're a speculator and you're just throwing money, against the market. But myself, the way that I trade is I need a confirmation that the market has changed. Otherwise, I don't want to get trapped in a sideways trading market. So gold has to break 1380, and two closes above 1380, I'm a buyer of gold. It means that gold's going to start to head back to the $1,500, $1,600, and $1,900 level. And then, if the gold market wasn't manipulated back in 2011, we would have seen gold probably at 2,000 to 2,500. So, the fact is that gold is a manipulated market. It always has been. It was back in the 80s. It was during the 11-year bull market when they tried to thwart the huge move that we saw in the biggest bull market of all times. And now, this week, something happened in the gold market that, again, deserves attention. And Randy, why don't you bring us up to date on that, because you've got the article there, and it was quite mysterious as to what happened this week as a result of something that happened in gold.
And it's been happening for many, many years, to the frustration of GATA, Gold Antitrust Action Committee, frustration for everyone, really. Gold is shaken by a mysterious 2 million an ounce trade. And it was a quiet Friday, last Friday. After weeks of relative slumber, gold traders were rudely awoken to a surge in volume and volatility in a span of 1 minute. Now remember, 1 minute. Gold futures contracts equaling more than 2 million ounces traded about 20 minutes before the Federal Reserve Chair Janet Yellen was to address a gathering of policymakers in Jackson Hole, Wyoming. The episode jolted the market after a measure of 60-day volatility on the metal touched the lowest since 2005. Now, gold has been in a quiet mode even amid political discord in Washington, concerns about U.S. interest rates, and tensions between the United States and North Korea. Now, this is how John Embry from Sprott Asset Management put it, and I think this is the best way. On Friday, as gold was challenging to break through the critical resistance of $1,300, some nonprofit, because why would you dump that much gold in one shot? It makes no sense at all. Nonprofit motivated sellers sold over 20,000 contracts in roughly 2 minutes on the COMEX, knocking the gold price back $12. To put that in perspective, some parties sold over 2% of annual gold mine production in 2 minutes. Absolutely ridiculous, according to John Embry. And get our free weekly newsletter from Herald, 1-800-432-1022, or rarecoloreddiamonds.com. We have that article in our free weekly newsletter in Herald. We shake our heads. No person who's trying to make money in a market would do that. So you really have to wonder, okay, what's happening here?
Well, the other thing about it is, Randy, is that there is a limit to the amount of contracts that any one speculator can hold. Now, if you're a hedger, it's one thing. You can hedge your entire production, whether it's gold or corn or oil or whatever. But if this was a speculator, it's also very mysterious to understand how in the world he accumulated 2 million ounces of gold, because the Commodity Futures Trading Commission they put a limit on the amount of contracts that any speculator, so this can't happen. So any one trader can't affect the market, in such an unbelievable way. So it'd be interesting to find out who this actual investor or dumper of metals was. But again, it's also interesting to know that gold only fell $12 on a move of that size. So I hate when those type of situations happen, because it takes away any type of credibility that the market has. And you and I have traded in gold and done our show together now for about 17 years, and we've seen everything. During the bull market that started in 2000 basically and went to 2011, we were there for the entire run. we saw every single move. We traded it. A lot of our clients became multi-millionaires because of the move in gold, and we were the ones, along with John Embry, that called that back in 2000. And we saw many things during that particular time that we scratched our head, saying that those are illegal acts, and the Commodity Futures Trading Commission, which is the federal government, really ends up doing absolutely nothing about it, which again takes the credibility away from that market. But again, as these things start to happen, it was only a few years ago that something similar happened in the Dow, where the Dow absolutely plummeted for a couple seconds, and nobody really determined what the reason for it was. So again, when these type of manipulative trades happen in a marketplace, it can affect the market for a short term. But then again, the way that I always look at it, if somebody is selling into the market, somebody has to buy that back. So it's an offset. It may be negative that somebody sold 2 million ounces of gold, but it's a positive that somebody bought it back, and that's why the market broke back above 1,300 and is now trading at 1,317. And again, we'll continue to monitor the market, but if things continue to heat up with North Korea, there's no way in the world that we don't want to be in the gold market. However, again, just to be cautious, we would like to wait for two closes above 1380, and then we'll determine the next move that we're going to see in gold, and we feel much more comfortable buying heavily once we get that confirmation.
Speak with Harold. He has programs in place, private programs where you can start making money right now. And speak with him. The call is free. Anything discussed is 100% confidential. 1-800-432-1022. 1-800-432-1022, the website rarecoloreddiamonds.com. Later in the show, we'll talk about the auction underway right now at hsfineauctions.com, and our featured diamond of the week from rarecoloreddiamonds.com is a .29 carat pear-cut fancy orange. And this orange diamond is absolutely gorgeous. Check it out at rarecoloreddiamonds.com, featured diamond of the week. And I think you would be very surprised if I told you that gold is doing better than U.S. stocks this year. I bet most people listening to our radio program would be like, what? No, the stock market has to be outdoing gold. Not the case. Wall Street's conflicting emotions of fear and greed are duking it out right before our eyes. Greed is obviously alive and well. Confidence in the U.S. economy has lifted the S&P to an impressive 9% jump this year, but gold, which is thought of as a safe place during times of fear, is doing even better. The precious metal has soared 12% this year to over $1,300, putting it on track for the best performance since 2010. So what gives? Believe it or not, it's not that rare for both gold and stocks to do well at the same time. Just last year, gold jumped 8.6%, nearly besting the S&P 500 of their gain of 9.5%. Gold also soared nearly 30% in 2010, a year when the U.S. stock market rose a very healthy 13%. Both gold and the S&P 500 were up about 23% in 2009 as well. It's a bit surprising, but it's not that unusual, according to Ed Yardeni, president of investment advisory Yardeni Research. And in some ways, it makes sense, given the mixed emotions displayed lately by the CNN Money Fear and Greed Index, which measures market sentiment. Fear and greed is currently flashing extreme fear, but just 1 month ago, it was sitting comfortably in extreme greed. One likely factor for gold's rise, investors who've been forced to chase the rising stock market are trying to hedge their bets in case something goes wrong. Many people are concerned about the stock market valuations, but they don't want to miss out on the rally, according to Axel Merck, founder of Merck Investments. What could go wrong? Lately, investors have been focusing more on geopolitical risks like the nuclear standoff with North Korea, turmoil in Washington, and the looming deadline to raise the U.S. debt ceiling. President Trump's unprecedented style of governance is also keeping investors on their toes, to say the least, with all his tweets. Trump's Twitter handle still stirs nervousness in the marketplace, according to Lindsay Bell, investment strategist at CFRA Research, wrote in a report on Thursday. Looking ahead to the battles in Washington in the fall, Bell said gold is a smart and defensive way for investors to diversify their portfolio ahead of an increasingly uncertain near-term environment. Russ Kosterich, portfolio manager for BlackRock, which is a huge, massive hedge fund company, their global allocation team, agrees that gold is benefiting from rising uncertainty over U.S. economic policy. He said gold could tumble if Washington gets its act together, but he's not banking on that happening. I would prefer to bet on gold's diversification properties rather than political stability, he wrote in a report. And Ray Dalio, as we mentioned on a past show, the founder of the world's biggest hedge fund, warned that investors should have 5 to 10% of their assets in gold due to the risk of political instability. And he recently said on LinkedIn in an article, risks are rising and investors need hedges in case things go badly. But interesting to note, so far this year, gold is up higher than the U.S. stock market. So gold, here we are, probably with the increase that we've had here in the last week or so, about 13%, versus what's happening in the S&P, probably around 10%, as we just sort of eyeball those numbers. But Harold, interesting to note, and we have about 2 minutes left in our segment here.
Yes, it is. Again, gold is reacting the way that it should be reacting. The dollar has weakened, so gold has moved higher but couldn't break 1,300. We thought that it would take a geopolitical situation for that to happen, which it is. Again, the situation in North Korea is concerning. But again, the market still has to break through support and resistance levels in order for it to be tradable, and that's what we're waiting for. So I'm not a speculator. I'm not going to sit back here and say, well, things are looking good and Trump's not doing a good job and North Korea and da-da-da-da-da, let's go ahead and buy it now. That's not a prudent thing to do. We need to wait for a confirmation, and then we feel much more comfortable going forward. But at this point here, gold is certainly starting to show that it could move into this next phase of a bull market, and if it is going to do that, you can bet your bottom dollar that we're going to be on top of that and tell you exactly what to do in order to capitalize and make the maximum return on your invested dollar.
Connect with Harold. He has programs in place where you can be making money right now. We see GICs at 1.5%. You're not going to be able to retire on that. How do you invest today so you can retire tomorrow? That's why we do the radio program. That's why Harold has the investment programs in place that he does. Educate yourself. The call is free. The information is free. All you need to do is connect with Harold at 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com. Coming up, we'll talk about hsfineauctions.com and the auction underway online right now. Also, we'll be speaking about our featured diamond and diamonds in general. Our featured diamond this week, a 0.29 carat pear cut fancy orange. You can see it online at rarecoloreddiamonds.com, featured diamond of the week. The World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on August 31, 2017. Our time right now is 9:06 Mountain. Radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3. It's a Labor Day, a long weekend. Hope you and your family are enjoying the long weekend as everybody heading back to school, heading back to work. And yes, markets will be more normalized once all the traders come back. It will be an interesting fall. We look forward to it. We encourage you to keep tuned to our radio program every week. If you ever miss a radio program, they're archived on Harold's website, rarecoloreddiamonds.com. We also have a podcast through iTunes. Type in The World Financial Report on Radio. You will find us there. And how do you invest today so you can retire tomorrow? Very hard to retire in the financial world we find ourselves in today. There's so many financial landmines, and that's why Harold is there. His phone is open for you to call. You can call him freely at any time, 1-800-432-1022. Call is free. Anything discussed is obviously confidential, and Harold has programs, private programs in place. You can talk to him about investing in gold, silver, and diamonds. RareColoredDiamonds.com, 1-800-432-1022. Our featured diamond of the week is a .29 carat pear-cut fancy orange. And orange diamonds, if you've never seen one, really some of the most beautiful diamonds there are. We love all diamonds, but orange diamonds, because of the color, are absolutely gorgeous. Beautiful, beautiful, beautiful. Check it out, RareColoredDiamonds.com, featured diamond of the week. One of the stories we didn't get a chance to get to last week, this was in our free weekly newsletter from last week. Diamonds, not marriage, are forever for China's millennials. Jilly Jai was 24 when she got her first diamond ring. It was a 2.5 carat solitaire given to her by her parents. In the 3 years since, the executive assistant from Shanghai has amassed a 15-piece diamond collection, including a ring, pendant earrings, and necklaces that she bought for herself. We don't have to passively wait to be gifted a diamond by a man, the unmarried college graduate said. Diamond jewelry is a natural way to express ourselves. It's a far better investment than most fashion items, as it won't only gain in value, but can be passed down through generations. And they say financially independent, college-educated, and those born in China after 1980, Jai personifies a key consumer group the world's diamond industry is counting on for growth. So-called millennials now account for 68% of diamond jewelry sales by value in the world's most populous country, worth about $6.7 billion last year, according to research by De Beers, the world's biggest diamond producer. But millennial women, defined by De Beers as those aged 18 to 34, spend about $26 billion on diamond jewelry, and that was in 2015 in the world's 4 main markets, acquiring more than any other generation. Chief Executive Officer Bruce Cleaver, he said in a report in September that they believe there's strong potential for the Asian markets, as they have always been more fascinated with hard assets like gold and silver. These 220 potential diamond customers are still a decade away from their most affluent life stage, representing a significant opportunity for the industry. But Harold, that's one of the things we've said for a long time. Obviously, North America, a mature market for gold and silver and diamonds. But when you get over to the Far East, diamonds, the opportunity there is just simply amazing, outstanding, because we know that China is growing and expanding, and just based on that story, women are going out, they're willing to buy their own diamonds and jewelry, and as we said on the last show, and I think it's a very valid quote, what sort of investment is there better than diamond jewelry? Jewelry is an investment you can wear for 30 years and then sell. What else can you do that with? It's simply an outstanding investment, and everyone should take a serious look at it.
You better believe it, Randy, again, and that's very interesting that the millennials can actually afford to do that, but it's a great story, and it's very, very true. The fact is that to invest in stocks, you own paper. You know, the fact is that if you're looking at certain stocks like Google or Amazon, they're unaffordable for most investors. I mean, most people can't even afford to buy a couple shares of those stocks. So, you know, the younger generation has to look elsewhere as far as investments. And again, it makes sense that something that you can wear and enjoy, but over the long term is going to hold its value and appreciate, makes an awful lot of sense. We're going to be holding an auction in October for only white goods. So this is very similar to what that report is talking about. Because of our mining capabilities, we will be offering diamonds way below Rappaport, like half price type of thing to start the auctions off. So this is what we're doing to increase our auction business, which brings in more clients around the world that makes it much more beneficial for our auctions to run. So we're very excited about that. We have two auction sites right now that are getting ready to both be working at the same time. One of them is the auction that's ongoing, which is our silent auction, and that's ongoing. We just added 3 new pieces to that, as many of the pieces have either sold or expired. Out of the 11 pieces that we had up, we actually sold 6 of them, which was not too shabby during the slower months of the year, which is July and August. As we get into September, October, November, the end of the year, and next year, we anticipate that the auctions will do better and better. This was a new concept for us, so we really just wanted to try it out during the slower months to see how it went and be able to correct any errors or any concerns that we had. But thus far, it worked extremely well, and we will continue to run those type of auctions. However, we do have an opportunity to offer white goods also, some very beautiful white diamond jewelry. Now, Rappaport is the price that the industry suggests that diamond should sell for. We're going to be able to start prices at 50% below Rappaport. So it's going to give us an opportunity to deal with actual dealers, and it's going to give the general public an opportunity to also participate in an auction that is really for dealers that are going to resell these diamonds to the general public. So we're doing everything in our power to increase the resale market in diamonds. Not an easy proposition, especially with the world the way it is today, but we seem to be gaining success from it, and we're very excited. We anticipate putting a lot of money this year into our auction businesses, as we feel that is the future for the diamond business.
Connect with Harold. Find out more about investing in hard assets, diamonds, gold, silver. Take a look at our auction. Go to hsfineauctions.com. All you need to do is sign up. You sign in. You can start bidding on the items that we have there. It's an ongoing auction, and some of the items are time sensitive. So if you see something that you would be interested in investing in, it could be going away at a particular point in time. We encourage you to bid as quickly as possible. Go to hsfineauctions.com and be a part of that auction. Our featured diamond of the week, 0.29 carat Paracut Fancy Orange from rarecolorediamonds.com. You can see it at featured diamond at Rare Colored Diamonds. And this week, the Argyle Pink Diamond Tender made its way to Perth, Australia, back home. We knew they were in New York City and obviously in London, and they'll be in the Far East at some point. And there was an interesting article that came our way. The market fundamentals for pink diamonds remain robust, according to Rio Tinto CEO J.S. Jacques. Said the market fundamentals for pink diamonds were robust as he showcased the largest fancy red diamond in the company's 33-year history of its Argyle Pink Diamonds tender in Perth. The 2.11 carat polished radiant cut diamond, named the Argyle Everglow, was first revealed at an event in New York last month. Jacques said the combination of healthy demand and extremely limited supply continued to support significant value appreciation for pink diamonds. The market fundamentals for pink diamonds remain robust. At more than 1 billion years old, each Argyle pink diamond is a fluke of nature, commanding the attention of investors, collectors, and diamond connoisseurs across the world. And the annual tender is a showcase of Rio's rarest diamonds from its Argyle mine in Western Australia, which is going out of business by about 2020. The mine should shut down by about 2020. They may have a couple of years' supply of diamonds in their vaults, but at that point, it will be over. To give you an idea of the scarcity of what we're talking about, there are 58 diamonds in the tender this year, and a total weight of 49.39 carats, and they feature 5 hero diamonds, and these hero diamonds will go for a lot of money. Now, the bids will be closing on October 11. Rio expects to produce between 19 to 24 million carats of diamonds in 2017, from Argyle and its 60% stake in the Divic mine here in Canada. But the Argyle Pink Diamond tender closing October 11, so we should have an idea of how things went here in about a month or so. But it's interesting to note for the entire world, 58 diamonds in about 50 carats. And we've had that picture and we've shown it in our free weekly newsletter periodically just to make a point. There's a woman holding a champagne flute, and you have it basically about a half full. And because we're half full people, we're not half empty, right, Harold? We're half full.
You better believe it, Red.
So we're half full of pink diamonds, and that's it for the world. And that's what they're coming out with every year. But at some point in 2020, it all ends, and they may have a few in the vaults to carry them for a few years with the tender. But at that point, it goes to a secondary market, and Harold, that's where it gets very, very interesting.
You better believe it, because again, that is not a large number. And the fact is that the diamonds that came out of the mine are fairly small. You know, it's funny that these small little diamonds are known as the most concentrated form of wealth on Earth. 55 diamonds for the entire Argyle tender, and you're talking that none of them were over 2 carats. So half a carat to a carat is the norm for that type of situation. So you can imagine that these diamonds are all going to sell for record prices. They have for the last several years. Even the ones with very poor clarity, like the I1s and the I2s, have still sold for record prices. So when you're looking at pink diamonds from the Argyle mine, the clarity is not the most important thing. What's the most important thing is the color. And the color of these diamonds are spectacular. You know, as far as the tender goes, it's the fancy pinks, then the fancy intense pink, then the fancy deep pink, and then the top of all, which is the fancy vivid pink. It's got the highest saturation. And the deeper the color, the higher the saturation, the more the diamond is worth. And up to 40% of these diamonds that are coming out of the Argyle mine right now, the clarity is not important at all. And in fact, in many cases, they don't even put down the clarity. They don't have the diamond tested for clarity. If it's eye clean, but the color is magnificent, that's what they're going for. And these diamonds are all selling for record prices at the Argyle tender. And the people that are buying them are investors and jewelers and dealers that are going to resell them to the market. So obviously, if an investor buys it, he's buying it for himself to hold on to, and it's a phenomenal investment because, again, there will be no more of the pink diamonds. But then if a dealer buys it, he's buying it to resell. If a jeweler buys it, he's buying the loose stone. He's going to put it into a ring or a necklace or whatever, and then they're going to sell it at retail price. So these diamonds are one of a kind. You'll never, ever be able to duplicate the diamonds that are coming out of this mine, and the mine is going to close in 2020, which is only 2.5 years from now. Then, give it, as Randy just said, give it 2, 3, 4 years for all the diamonds to run out, and then you're talking about the fact that there's a shortage, a tremendous shortage, of some of the rarest diamonds, which are the pink Argyles. So those that own those diamonds are to hold on to them, sit back, and let the market do its thing. And then when we get ready to sell, then we'll have a firm determination as to what the market is going to offer us. But I'm very excited about it. Again, it's almost like economics 101. When the demand for a product is high and the supplies are low, the prices tend to go higher, and that's what we believe is happening with Argyle.
You take a look at pink diamonds. In the 244 years of auctions, only 18 pink diamonds of more than 10 carats, 2 grams, have come up for sale at Christie's and Sotheby's. As well, pink diamonds have tripled over the past 15 years on average, and would be 20 to 30 times the value of white diamonds, according to David Farden, CEO of Lindley's. Also, Josephine Johnson, Argyle Pink Diamonds manager between 2002 and 2010, the index price for diamonds from the Argyle Pink Diamond tender increased 108%, while white diamonds rose 22%. And when it comes to rare colored diamonds, a great quote. In 1817, R.J. Hay, an eminent French mineralogist, wrote, "Gems are the flowers of the mineral kingdom. Fancy-colored diamonds are the orchids. Fancy-colored diamonds, like orchids, are truly exotic and rare beauties of nature." And as we have said this many times before, that rare-colored diamonds, they're nature's art. And that quote came from a PBS series on diamonds, PBS Nature series that Harold sent out to our radio listeners. Diamonds are nature's art, nature's most beautiful art. Every stone is a story. Every stone tells a story. And if you look at fancy-colored diamonds, they are exceedingly rare in nature, but the intensity of the color is also an important quality of the stone. And this really differentiates one diamond to another, making them impossible in some ways to be exactly the same. The GIA of America grades fancy-colored diamonds as such: faint, very light, light, fancy, fancy intense, and fancy vivid. Fancy vivid colors are the most sought after. The amazing stone offered in an auction, usually you'll see, are very bright and deep, fancy, vivid blue color is very popular right now. Even in the category fancy vivid, one can find different levels of intensity. And the saturation and hue of this stone, obviously, can be absolutely mesmerizing, but at the same time, different from all the other diamonds that are out there. Diamonds obtain their color from so-called color centers. They are single or multiple non-carbon atoms that replace carbon in the structure of the diamond, causing a disturbance in the structure and sometimes giving rise to the color. The distinctive blue color in diamonds is attributed to trace amounts of the element boron in the crystal structure. Minute traces and just really, really minute traces of boron are required to create the colorization. Less than 1 boron atom per million carbon atoms is sufficient to produce the blue colorization. And that's an excerpt from the Natural History Museum website. But you go back to the early 17th century, and French merchant and investor Jean-Baptiste Tavernier was among the first to be intrigued by fancy-colored diamonds. In 1669, he told everyone, take a look at these diamonds. He sold the Tavernier blue diamond, also called the French blue, to Louis XV. In the first half of the 17th century, he was the first who made a reference to pink diamonds. Moreover, in 1642, he mentioned a very large rough pink diamond weighing over 200 carats, shown to him by the Moguls in the kingdom of Golconda. So, Harold, it's amazing to go back and take a look at the history and take a look at what really is the backstory of naturally fancy-colored diamonds, rare-colored diamonds. And every diamond has a story, every diamond tells a story, and no diamond is really alike. And that's the beauty of investing in diamonds, because what you have is its own unique piece of artwork directly from Mother Nature.
You bet, Randy. It's really something special to hold these diamonds in your hand and understand the history of them and what made them turn the color that they've turned. For example, the featured diamond, this beautiful orange, may be a small diamond, but the color is what makes this diamond so sensational. What turns a diamond orange is nitrogen. So nitrogen seeping into the ground turned that diamond from white to orange, and the price is consequently 10 times more than if it was a white diamond. So it's just thrilling to know that these diamonds are billions of years old. They come from the center of the earth through volcanic eruption. These diamonds are magnificent in their rough state, but then they go to a cutter and they're cut and polished and turned into these magnificent finished products. So again, very fortunate to be able to hold these beauties in my hands every day and get to see some of the world's rarest diamonds. It's a true treat.
It's really the most secure and profitable investment, as we say. We used to say millions, but now it's billions of years in the making. Rare-colored diamonds, nature's art, private, portable, and stable wealth. And if you would like to learn more about investing in hard assets, speak with Harold Siegel. He has different programs in place where you can start making money today. Connect with him at 1-800-432-1022. The website, rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022. And the question is, how do you make money in the environment that we're in? How do you invest today so you can retire tomorrow? And that's why we do the radio program. That's why Harold is there for you at the other end of the line. He'll be happy to speak to you. We have a radio show. We obviously have the newsletter, the companion to the radio show. There's seminars that Harold puts on. We have the websites for auctions. We're there for you. We're looking to help you make money, and that's what this show is all about. We want people to be able to be in a good financial position. And take a look at our featured diamond of the week, a .29 carat pear-cut fancy orange. Go to Rare Colored Diamonds, rarecoloreddiamonds.com, featured diamond of the week. And if you look at really the 5 compelling reasons to invest in diamonds, privacy. And privacy is very important in the environment that we live in today. You really don't want anyone knowing what you have financially. 2, portability. Portability is very important, especially when it comes to a concentrated form of wealth, and diamonds fit that perfectly. Estate planning, passing a diamond down from generation to generation. And at some point down the line, people obviously in the family can look at selling it at auction and making a nice profit. Price stability and obviously good long-term growth, number 4 and 5. And that's something that we've seen over the years, good stability in price and good long-term growth with Argyle pink diamonds in particular. But if you have been waiting for the perfect time to be involved in this hard asset market, now's the time to speak with Harold Siegel. We're getting into September. The traders are coming back. Everyone back to work, back to school. Don't delay. If you've been waiting and not happy with the investment results you're getting, speak with Harold. 1-800-432-1022. RareColoredDiamonds.com is the website. And Harold, we have about 2 minutes left, and I know that you encourage anyone to pick up the phone and give you a call.
You bet, Randy. Again, we're here to help. The gold market's starting to move. We're watching it very closely. We broke 1,300 this week. We've had a couple closes above 1,300, which is great. The important number is 1,380, so we'll be seeing how the market reacts as we get closer to that. The Argyle tender is doing well. A lot of good things happening overall in the market, but again, now is not the time to speculate. Now is the time to sit back and be more conservative and wait for our opportunities. Jumping in before the fact is not a good situation. We've got to wait and let the markets come to us, and that's exactly what we're going to do. Gold market could be a great one for us coming up. We have gold, kilos of gold at bid prices with no commissions available for our Canadian clients. And again, the diamond market is one of the best long-term investments you could make.
Connect with Harold, 1-800-432-1022. RareColoredDiamonds.com is the website, our featured diamond of the week. And this is a diamond that you'll not see very often because of how vibrant the color is. It's a .29 carat pear-cut fancy orange. And you can see it online, RareColoredDiamonds.com, featured diamond of the week. And definitely stay in touch with our radio program. We're on 6:30 CHED every Sunday afternoon at 3. The shows are archived on Harold's website, RareColoredDiamonds.com. And you can listen to the program at your leisure anytime you want. We have a podcast for those that like to be portable. We're at iTunes. Type in The World Financial Report on radio. You'll find us there. And definitely our thoughts and prayers go out to those affected by the tragedy, that huge storm in Houston. We wish them nothing but the best. But if you've been listening to our program, holding back, definitely give Harold a call. RareColoredDiamonds.com, 1-800-432-1022. That's it, another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.